Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Tuesday, the 3rd of May. Starting off with Finhouse Mining, and you can see that here there's been a rising trend channel in place since December last year. Very strong accelerating progress here within the channel, and the latest break of the early April 4.19 pence resistance, a positive sign on a weekly close basis. The view is that while there's no end of day close back below that last peak, we should head as high as 7 or 7.5 pence at the top of the December price channel as soon as the end of this month. Moving on to one of the best performers of the year to date, and that's GCM Resources. No sign at this stage that the shares are ready to slow down. In fact, we've got this bull flag consolidation with a view that at least while there's no end of day close back below the floor of the flag at 15 pence, we should see a target here as high as the top of this broadening triangle from the beginning of last year, heading towards 25 pence. In the meantime, any dips towards 15 pence regarded as a buying opportunity, and only really back below the 20-day average, still trading at 11 pence, would be outright negative on the shares, especially as at the moment we're in the run-up to a likely golden cross buy signal between the 50 and 200-day moving averages down there towards 7 pence. Lek Oil is next, and the stock's always been a contender but never quite delivered on its promise. Current situation, though, is that it would seem that we've got at least an intermediate bull phase here, bounce off the 50-day moving average at 15.08 pence, also bounce off this rising RSI line from the end of February, and the view is that at least while there's no end of day close back below the 50-day line, we should head as high as 25 pence, which is the top of this rising December price channel. Coming up is another perennial private investor favorite, Orosur Mining, starting to deliver the goods here as well with this V-shaped bull flag, strong rebound off the 20-day moving average at 8.89 pence, and while we're above that, looking for significant further upside. The idea here is that over the next 1 to 2 months we could head back to the main 2-year resistance zone around 16 pence, which is also the top of this rising October 2014 price channel. Stop loss back below the 20-day line and only really back below 8 pence, which was resistance on the in terms of the earlier recovery, would really be an outright negative for the shares. Red Rock Resources I've covered quite a lot recently, but doesn't hurt to have a look just one more time. Here we've got the breakthrough the 200-day moving average earlier last month, decent weekly close for April, and the double and triple bounces off neutral RSI 50 and the 200-day moving average at 0.52 over the last week or so. The likelihood is here that while there's no end of day close back below the 200-day line, we should see a 1 pence target, which is the top of this broadening triangle from September last year. Savannah Resources finally coming good as well. Here we've got a situation where there's been a decent breakout through the former resistance of 2.46 pence for March and 2.44 for April. View now is that while there's no end of day close back below the 2.46 pence level, we should see a significant further upside. That would be towards the top of this rising August price channel at 3.5 pence over the next 4 to 6 weeks, or perhaps even less. Starvest is the final stock on the list here. Bull flag above the 200-day moving average at 2.28 pence. That should be enough to take the shares up for a decent move to the upside. 4 to 4.5 pence, which was former 2015 resistance. The initial target while there's no end of day close back below the 200-day line, the black line there at 2.28 pence. That's it from me. More updates at the same time tomorrow.